I've been focusing on forex for now.
It's about to get fun then.
Oh, I know. Part of me feels like I'm getting in too late, but I know I did the right thing just because when you start focusing on so many different things at the same time, you're probably not a good recipe. But
Honestly, if anything, you're probably getting in at the right time because initially, when the entire thing started, it was obviously all hype. That's where you get like
mhm.
those, you know, coins that have no use case and people are just investing it. Like, the Squid Game meme coin?
Yeah, that was a scam.
Yeah, and people took away like 2 million, but the fact that people would go and invest in it, like, what did you think was going to be the use case for that, right?
Yeah,
But now you're actually seeing real use cases because people have been adopting crypto now. That's all you needed. The fact that people
yeah.
would adopt crypto and
Mhm.
corporations as well now were a lot of corporations have already been talking about will accept it, like PayPal. You
Yeah.
had, I think it was General Motors and like a couple of other who were like, all right, we'll go ahead and use Bitcoin as a form of payment. So there's like this fluctuation where like some people would say like, yeah, we'll accept it, and they'll go back on it, or some people would be like, yeah, we're just gonna continue to accept it
Mm.
if people do want to go ahead and invest, or sorry, make payments that way. But now, as the adoption rate increases, you're actually going to see more crypto coming out with actual use cases. So, if anything,
Mm.
you're not late, but we're getting started. This is just a start.
Part of me feels like this is like the very beginning
It
of
is.
like no, I'm saying like the very beginning of no more fiat currency. But like that's
Hmm.
gonna take a long time.
Yeah.
And maybe it doesn't, right? But at the same time, the thing that confuses me is that if you think, let's say a company is accepting Bitcoin, AMC is accepting Bitcoin, like Tesla, any of these companies are accepting Bitcoin. If you think Bitcoin is going up, why would you be spending money on a car or buying a car with it when you know it's going to appreciate in value?
Yeah. Well, it's the same with like fiat currencies too. Would you rather go buy purchase anything in general when the currency is weak, or are you gonna go do it when the currency is like super strong, right?
That's
Or
a good point.
interest rates as well. You could apply any of that. So
Yeah,
yeah, it does come down to that. But I think exactly what
but
you
the
said.
growth rate,
Fiat currency isn't going anywhere
yeah,
anytime soon.
not anytime soon. Yeah,
Yeah.
I'm saying this is just the beginning, and
Yeah.
I think this whole meta world plays a part in this. We were actually watching a video, the Patrick Red David guy I was telling you about
Yeah.
yesterday, about them discussing the meta world
Yeah.
and how like in depth this thing is going to be.
Mhm.
I think it's like pretty dangerous for society because we're going to be even more out of reality. Like
Yeah.
everyone's gonna, you're gonna have a job in there. You're gonna have a relationship in there. Like you're gonna have to plug in. Where it's gonna be like a matrix.
You're basically playing Grand Theft Auto.
Exactly,
That's
but
what
that's
it is.
exactly what we said yesterday. We were like, uh, you know, Grand Theft Auto came out a long time ago,
Yeah.
and that was like the original meta. Like
Yeah.
you could have real estate and Grand Theft Auto. You could personalize your character, all these things, and play online.
Yep.
Um, like why didn't anybody think of it back then? But maybe they did. Maybe that's what they were thinking of
Mhm.
or working on in the beginning.
Yeah.
What's up,
So
Jen? What's up, Andres?
yeah. So you might even see like the crime rates and stuff like that increasing because eventually people are going to feel like it's just a game,
Mm,
right? So it comes down
yeah,
to that.
yeah,
So we are live on
crazy.
YouTube right now. So we have people popping in. How's it going, everyone? And I'll be right back in about 30 minutes.
What's up, guys? Yeah, I'm gonna be taking over. Sherman's gotta bounce for a second, but she'll be back. But we're gonna go through the economic calendar over here and what we're expecting for the week coming up. Tomorrow, we're probably not gonna have too much volume due to Veterans Day here in the U.S. And I know a couple countries, which I was kind of confused about. I didn't know that Canada celebrates something very similar, or the UK celebrates something very similar. It's like a Remembrance Day, almost like our Memorial Day. So that's just what I understand. Obviously, I'm not in these cultures, so um, I'm not too sure. But Veterans Day is tomorrow, so we're not gonna have too much volume, but we do have data coming out for the pound. So looking over here, let's actually take a look at the whole week and what we had coming out. Um, Nothing much. Obviously, we had the daylight savings over on Sunday, but how some of our head of banks were speaking in the beginning of the week, right? But what they were speaking about, they were at a conference for gender inequality. So obviously this is very important, but at the same time, they weren't talking about much that was going to affect the markets, right? So you had heads of banks speaking, you had Clarita speaking, you had Powell speaking, Bailey speaking as well, Bowman. There were a bunch of people speaking this past week, but that was all that was really going on Monday over here. Moving into Tuesday, we had PPI coming out. Right. We had PPI coming out over here, came out same as expected, a little bit higher than the previous, and then core PPI over here, excluding food and energy, came out lower than expected, which honestly, with our inflation and everything, is actually good. Again, Powell spoke, and that was really about it on Tuesday. Now coming into today, we have actually no. Yeah. Coming into today, you have CPI and core CPI coming out. Obviously, this is a big indicator for inflation, so we'll see where that's at. So maybe that moves gold. I know gold has really been inside of a long extended monthly range over there, and that's what we'll break down in a second. But that's what's going on. Now, moving into tomorrow, again, like I said, you do have Great Britain data. You have prelim GDP coming out, regular GDP, construction output, index of services, industrial production, all these things coming out. A bunch of yellow folder events, so not much that you have to truly pay attention to, but get more people coming in here. But again, we do have the bank holiday, so we're going to be out of the markets. You do have EU economic forecast as well. Friday is some of the things that I really pay attention to, like JOLTS job openings. And if you don't know what that is, that's the government telling us how much jobs are actually available for people to pick up, right? Now, we know about unemployment and stuff like that, but when it comes to JOLTS job openings, it tells the Fed, right? It tells the Fed how many jobs are actually available, so people could actually take these jobs, so now we could start tapering, something like that. That's what's going through their head as far as like economic stimulus and stuff like that. If there's enough jobs available for people to get, maybe they can go get those jobs instead of taking stimulus. Right. So also we had prelim University of Michigan consumer sentiment, which is a big deal. For some reason, I know a lot of you guys here in the U.S., you know what's going on, but consumer sentiment has been rising over here. Like they're expecting 72.5 instead of 71.7. I don't know how the consumer sentiment would be up right now with inflation and everything going on right now, but they are expecting higher consumer sentiment. Now, also prelim University of Michigan inflation expectations previous was 4.8. Now, keep in mind they look for 2% on average. And we're easily double that right now in the U.S. And I know globally it's happening as well with supply chains, but they generally like to keep inflation around 2%. So just keep that in mind. But let's go over to the charts over here, the fun part. Breaking down some of our technicals over here. A lot of you guys have been with us. A lot of you guys here in the Zoom watch our breakdowns on a regular basis, and you see how we break down the chart. So we're going to keep this nice, simple, quick. You guys know about our multi-year downtrend over here that we ended up breaking, and now it looks like we're coming down to retest it, right? We ended up breaking right over here. Now we're coming down to retest, possibly to continue up, or are we going to continue to retest this entire move that we had coming down, that we had where we created that support or held that support? Then the Bank of England talked about increasing interest rates, and we just kind of skyrocketed up to 158.2, right? Or 0.200. Now, over here, you have our lows, which we don't have to pay too much attention to because it's so far away. But the 2008 market crash brought us all the way back down to around 120. Let's get rid of the chat. Yeah, 120 right over here. We ended up correcting, holding a support over here, and then enter that recovery phase that we're in right now since COVID over here, right? COVID happened right over here. We've been in this recovery phase, pushing all the way up. So we're in a very similar range right over here, if you take a look at 158 and then 156 over here, very similar price action as we have over here, right? We created this high at 156, we come down 149, we end up holding support, and then they ended up increasing interest rates, and we just kind of rallied massively, coming all the way up to around 195. I would say 195, right? So pay attention to this price action over here. Let me let some of these guys in. Pay attention to some of this price action over here to give yourself a reference for what you can be expecting over here. That's why price action is so important. And that's kind of been my rebuttal, I guess you could say, for, trading crypto and paying so much attention to crypto, is because there wasn't much history back, where you can really base your moves off of some recent history. You could do that with fiat currencies. You can't really do that with crypto right now. But again, I guess you could call me ignorant, but what I was doing was focusing on one thing, just like everyone else should. You should always be mastering one thing. It doesn't matter what business you're in, right? Master one thing, and then once you master that, you can branch off to other things. So I didn't want to leave, or I didn't want to start focusing on crypto before I mastered Forex, right? So somebody's trying to join over here, but it's not letting them join. KCG. So anyway, as you guys have over here, the more recent price action, you have 156 as a very significant level over here. So we're going to mark that off. Coordinates for this. So 156 ended up being a nice resistance over here that we finally reached back in May. We come down, held support 149 over here, which we can mark that off as well. Okay, everyone's in that wants to be in. Perfect. So we have this range that we're kind of sitting in right now. But again, you got the trend line. Trend lines aren't as important to me, but they do make sense as long as, they're put in the right place and you're not kind of just manufacturing trend lines, hoping like, all right, this is connecting with this and it's only hitting 2 times. Don't trade so much based on trend lines. I pay attention mainly to support and resistance, supply and demand. But anyway, if you take a look over here, since COVID, we have been respecting this trend line, right? We had that tank back in March and April of 2020, and we've just been recovering ever since, right? But now we're kind of stuck in this range over here. Well, we'll take a look at the lower time frames right now. We'll mark off 158, which is what we tapped into a week or two ago. Anybody have any questions so far on the higher time frames?
I'm with you.
Awesome. I see him. So our next target over here, based on the weekly, right? If we end up breaking 158 at some point, we'll just mark this off real quick. You have this wick fill right up here, which we'll take a look at in the lower time frames. But first, we need to look at where price is perfectly. Actually, just make this perfect. 60. Perfect. First, we need to look at the most recent price action. So we ended up breaking 156, coming right back down. I love this price action over here as well. I just want to... That's... Got these zones over here. Now, I like this price action right over here because what happened was, if you take a look at the fundamentals are always behind these moves. So if you take a look at what happened right over here, what was going on that made GJ skyrocket from 149? Now, it could be technicals, right? After us bouncing off this trend line, holding support, wanting to retest this key area, and then skyrocket. But also, you got to understand, if you guys only trade technicals, this is where fundamentals start to come in and give you confidence in where price is going. Now, what happened over here was the Bank of England and Bailey was talking about increasing interest rates even before tapering. And they were going to do that here in November, right? So that brought us all the way up to 158.200. And then what happened? We ended up reaching 200. And before they ended up increasing interest rates, buyers came out, sellers started to take over a little bit. We started to hover around here because this was all hype. This was all market sentiment, knowing that there was a good chance that they were going to increase interest rates in November. So they started to stall off over here, waiting for that to actually happen, right? We created a top wick past the low of this doji candle over here. And guess what? We ended up, they ended up not increasing interest rates. And then just, we kind of corrected this entire move. And we still could be correcting the entire move over here. As you see, the weekly candle still in the middle of the week has created a top wick over here. And it looks like it's starting to fade down. Got someone in the chat, and I think it's going up. Okay, cool. Thanks, Jen. Now, what you guys got to understand is when that happens, and what they said back when they didn't increase interest rates last week, they said that, maybe we're not ready yet. We're not ready to do something like this yet. And maybe we're going to delay this, not in December. We're not going to do this in December unless we get good data coming out. But we're probably going to end up doing this in February, right? That's what they announced. So with that going on, them saying that they're probably going to do it in February, also Brexit going on right now, the issues right now with Northern Ireland being caught in the middle of everything with the EU, with France, and Great Britain, Ireland as well. Everything's kind of in limbo when it comes to Brexit, and they might issue Article 16, which will create a lot of problems for the UK. But right now, that's where price is at right now. So with nothing really going on until we get the data next week, which is what they said they were waiting for, the data on jobs on the 16th is coming out. And if that comes out good, then they might increase interest rates next week, right? We may hold support, we may correct this move and continue right back up. And guess what? That lines up perfectly with technicals, because right now we're retesting this multi-year downtrend. We created a high up here. Are we going to hold support over here? They increase interest rates, and then we just continue right back up? That could very well happen. So that's what you want to be looking out for. But in the beginning of this week, when I broke it down with my personal group, we said that we were going to probably be hovering around this area because nothing is really going on right now. There's nothing to really move the market. There's not that much volume right now. So we're just going to be collecting orders in here. If you take a look at the daily now, the daily, we are sitting in this range, right? Previous candle body highs over here to the left, previous rejection points of 152, 700. Someone else coming in. So right now we're kind of sitting in this range, bouncing off. We got this support right over here that was held, and then we ended up holding resistance right up here yesterday, right? So now current daily candle created a top wick, and now it's kind of hovering around this area, but we are still holding this support. This is something that you guys should really be staying out of, right? It's the more it ranges over here, the more it's going to break out pretty heavy. And you guys got some nice moves once we break out of this range, right? We just got to wait for that data to come out next week. They got some data coming out tomorrow. I don't really think it's going to move the market. But we said on Monday, anybody that's in my group, we got Chris in here, we got a bunch of guys in here. How many times did we say that we're going to be ranging down here on Monday, right? But now, if you wait for price to break out of this mess, you got such a clean move right here, right? At least up to 154, 700, right? This previous support. So you got 106 pips right here. Ranging. Yes. Jaspinder, if I'm saying that right, hope I am. I know what it's like when people butcher names, so just want to make sure. But if you take a look right here, I just wanted to point this level out real quick once we do break out of that range. Got a nice clean candle right over here. You could take price down, you get about 45 pips right in here. There you go, 46 pips. Now, when I say ranging, it's where price is just printing sideways, basically. There's no clear trend that you could be trading this in. Price is just grabbing orders. You're just sitting here. Banks are selling, buying, everything like that. And we're just kind of sitting in here waiting for price to break out of the range. This is a range right here, right? This is a range right here. more of a higher time frame range on the 4 hour. You do have some kind of a trend, and that's where you could be playing some of these ranges, but I wouldn't be playing a range like this. You could play a range like this, a range much bigger with a clear direction where we're printing these lower highs over here. Right? Printing lower highs. We actually had a channel over here. Right? So you have a clear direction. At the same time, it is ranging, but you have these lower highs and new lows being created, especially once we broke 156 over here. Right? So right now, we're kind of just sitting in this range, and you want price to break out. And you're just trading levels. When you're trading basic price action, not really using any indicators at all, what you're doing is just trading levels and waiting for levels to break. So you're waiting for this resistance to break, got a clean move right here, wait for the close above, maybe even wait for the retest. You can take this right back up to 154, 700. If you get that support broken, you got a nice clean move right over here, right back down to 152, 200 that you could take, right? That's the next level to the downside. So looking at the 1 hour, again, just a mess. I personally don't like to trade in any of this. This is why I barely took any trades this week. And then looking at the 30-minute, again, another mess over here. I do like this setup right over here. If we had a trending market, as this candle's passing the low of this candle right over here, we should be coming down to 152, 700 once we pass this. I've seen this setup time and time again. The only thing is, what you want to keep in mind is it's 50-50. It's not like a 70% chance that this is going to play out. It's only 50-50 because everything is sideways. So this could pass the low of that candle right there, end up rejecting this level, and then continue up and continue to range in here. Especially with when you have this support right here. And then obviously, I'm sure we're going to fill this wick, but you never know. That's why there's not much confidence when it comes to trading in these ranges. Again, you have ranges like we had up here above 156 that you could be trading in. Plenty of moves over here, right? Broke the low over here, got a nice clean move right back down to 156. Right over here, a nice clean move right back down. It's messy, but at the same time, it's a lot better to trade in a range like that than in a range like that. You want to be very selective, right? So that's GJ. I'm just waiting for price to break out of this, and that's about it. And I'm probably not going to touch it until it breaks out. So that is GJ over here. We'll put our little tag. We'll move over to gold. Anybody have any questions on GJ right now? Or is anybody in GJ that they want me to talk them through a trade that they took?
No questions. I was in GJ, but everything got stopped out already in profits. But
okay,
that's from like early, I think from Monday, yesterday.
Oh, okay,
No,
cool.
Monday
So you
was...
were you just trying to kind of like take a swing from here?
I took a swing from up top. What's that? The 150, 154, 500, that level right there.
Okay.
And then scaled in a little bit around 154, and then move stops to in profit, and then everything got stopped out once it started to range.
Okay, that makes sense. A couple of things that you guys want to realize when trading in ranges like this. I noticed that a lot of people like to take swings from these ranges instead of just waiting for price to break out. And you'll cause yourself a lot of like stress when trying to do that. I'm not saying you, Ian. I'm just saying like a lot of people like, listen, we're in this range right here. I'm looking to take this swing to the upside. We're looking to take this swing to the upside so that, we could grab this whole move over here, but we're going to take it from the middle of the range. Why not just wait for price to break out so that you don't have to worry about being stuck in this and not knowing what's going to actually happen? Another thing that's going to help you guys out too is the fact that you're paying attention to fundamentals and you know what's going on. You know that there's nothing really going on with the Bank of England right now that's going to really push price the way it was like this, right? This is all volume trade. This is all from an actual thing happening with them not increasing interest rates. It's all a correction of the previous move up. So right now, with nothing going on, what kind of a swing are you looking to take? You don't have that much volume for price to, either rally all the way back up to 154, 700 or break this support, right? There's nothing that's really hurting the pound right now that's going to break support and continue it down, right? Other than maybe Brexit. But again, pay attention to the 16th of next week, right? Pay attention to the 16th of next week, that jobs report. That's what the Bank of England's looking at. That's where you could start planning your scalps or your swings out, knowing that data is coming out. So just keep that in mind. Now, am I looking for a close below or just a break of the levels? You're definitely looking for a close above or below this range, right? At least wait for that close above, because you could always get faked out. You could always get that wick up, and then it just takes you right back out. So just wait for that close. You don't always have to wait for the retest, right? You could take a breakout trade knowing that you have volume at certain times during the trading session. But at the end of the day, you want to wait for a close above, a clean close above a range like this, knowing that price should be continuing up. Now, you can always still get faked out by waiting for that close. That's why you wait for the retest. But if you have volume, you have a clean move to the left, and we get a nice close above resistance over here, we should be continuing up. If you get that volume, you can at least get 10 pips out of that, right? Like, say we get a close from right here. This is just 10 pips right here. But you get the whole move right over here. You have 50 pips right there that you could take a nice, clean candle over here, especially if they say, okay, the December data is good. We're going to probably be, or this data is good. We're probably going to be increasing interest rates next month for you guys. So that's going to push us out. All right. So that's about it on GJ. We'll take a look at gold over here. Gold in a very similar price action as we were back from the 2012 recovery, 2012, 2013, right? We ended up pushing down over here, but now we're at historical highs because of COVID, right? And what we'll do is mark off some of those key levels like we do on GJ over here. 1680 has always been a very critical level. Kim coming in, 1680. Perfect. 1680 is a very critical level over here that we ended up forming a double bottom over here on the lower time frames, and then we ended up retesting over here with solid NFP data coming out as well, right? And then we ended up just rejecting all the way back up to 1860 or 1830, which is a very critical level over here on gold. Do this little thing right here. Now, we're holding support from the 1750 area right over here, right? Very critical level as well. But again, look at all these monthly candles right next to each other. You know that price really hasn't moved when you see monthly candles like that. I guess we'll mark off 1750 and adjust as we get in. What's up, Chris? My man. How are you? All right, 1830. So we've been stuck in the middle of this range right over here on gold. We are holding a nice support though, right? We ended up rejecting this area up here, coming all the way back down to 1860, and then we ended up rejecting with this candle. Held support at 1750 right over here, and then we get this nice clean bullish candle forming at that same exact level. So we know 1750, this whole area over here, very critical level. The next candle never passed the low of that candle, right? Never passed the low, flip bullish, past the high of that wick, and it's still a very strong candle. And we're still in the beginning of November. It's only the 10th, right? So could this be breaking through 1830 and continuing right back up to what's our next level? I would say 1910. So we have 1910 right up here as well. Nice clean move on the higher time frames that we can mirror to continue right back up to that way. Looking at the weekly over here, it's even more of a range. You can see the range even better. It's just very messy price action. I was telling the group yesterday actually. The only move I would have probably taken on gold over here is probably this one right over here, where you had this candle close at 1750, holding a strong support with a wick to fill. I would have grabbed this candle right over here. I'm not comfortable trading in a range that's 50-50. That's why I always tell you guys to have two pairs. If you have one pair, that's perfect. I mean, if you're only trading one pair and you're sticking to that, good for you with the discipline, right? But it's good to have that second pair in your back pocket that maybe you don't pay as much attention to as your main pair, but it's one that you know enough that you could be trading. Now, if you don't have that pair yet, you only have that one pair, what you want to do is start live back testing that pair. Like, let's say GJ is your main pair. You want to make sure that gold might be that secondary pair. And instead of putting money on the line with it, instead of actually trading it right now, what you're doing is live back testing it, journaling the trades you could have been taking notes on it, doing all that stuff. The one that you really want to be back testing is your main pair, so that you know that pair inside and out. You want to be that go-to person for any kind of information on GJ, if that's your pair, right? But when it comes to gold, maybe you're not spending as much time back testing, but over the course of the next couple months, you're live back testing this, journaling all the trades you could have taken. Now I'm starting to feel comfortable with gold. Now, if GJ is ranging and I see a move that I like on gold, now I could take that. Now, personally, I wouldn't go anywhere far. If you're a scalper, I wouldn't go any farther than two pairs, because once you start getting into 3 or 4 pairs, then you start confusing yourself, where it's like, okay, I have a setup that I could be taking on one pair, my original pair, and then this third pair over here too. They both have setups. Which one am I going to take? And you're all flustered. You honestly shouldn't be in 2 scalps at the same time. You could be in 2 swings or intraday trades at the same time, but if you're scalping 2 different pairs, you're going to confuse yourself. You're going to be all over the place. So it's better to just kind of simplify things for yourself, especially if you're just starting out, and just focus on that 1 or 2 pairs that you're going to be specializing in. But anyway, looking at gold, mess. We're right back at 1830. We got a nice rejection last night off of it. So we'll see where we're at right now in these lower time frames. There you go. Now, price is holding this resistance so far on the daily at 1830. And then the last time we were at 1830, what did we end up doing? The last previous times we were at 1830. We ended up tanking.
Yep, crash.
Hard tanks over here. So is it unreasonable to think that price may do the same thing? Especially with not that much data out, like not that much moving the markets, right? We could especially because tomorrow we have Veterans Day too. So is there anything that's really going to be popping us up out of this range and continuing up, popping us out of 1830? With levels like this, you need some hard fundamentals to push yourself out of it, where it's like, okay, now we're moving. Now we got some data coming out. Now we're moving. Right, but until then, or if Powell says something crazy, right? Powell says something like, I don't know, but if Powell says something that's going to move the market, you're gonna see a break out of this range. But again, we're kind of just holding this resistance over here. What we could do is draw a zone right there. Then you got this area to the left as well. The price has been reacting to as well. 1830 has been a significant level. Now, since reaching our area down here, I think it's 1720. Yeah, 1720. Previous support over here. Previous price rejection point. This mic. Since holding that support over here, we've been in a bullish trend. Right, we've just been pushing up over here. So we're reacting to 1830 over here. And last time we created this new high, right, in this minor bullish trend over here, we ended up coming down to retest this trend line and continue up, or form this trend line and continue up. Now that we're reacting to 1830, could we be coming down into at least this area, possibly down into this area to retest it and continue up? Now, We'll mark off 1810 right here as a possible target if we hold that as a resistance. 1830 as a resistance right here. So we could possibly be taking price right back down to that area. Take a look at the last time we were in 1830, these bearish candles, this one right over here that pushed us all the way down, right? That was back September 7th. Now looking at the 4 hour over here, let's actually adjust this. Looking at the 4 hour, we got a little bit of a mess over here. We have this support over here, and we have kind of like a support right here where price keeps rejecting off of, right? Keeps holding this support, right? Refuses to break below. But what I'm looking at over here is the opportunity for you to possibly take a sell at any point, because we know that price is probably reacting to 1830. We are holding a support right over here. It's see how like I don't like this is not a place to be trading right in here. All these wicks, like it's just a recipe for disaster. There's no point of trading in this. You want to wait for price to break out of something like this to be trading. So I would say just stay out of this whole range over here, and you could possibly, once we break support right here, you got a cleaner move that you could take to 1813 and possibly further. Because once we break 1813, you got a beautiful move right down here to this level, right? So I honestly would be staying out of this. As you can see, before this current 1 hour candle, it looked like we were coming down, right? Had a bunch of rejections, lower highs over here, price pushing down, retesting the low. We're probably going to be coming down to retest this wick, fill this wick, and retest this level over here, right? But guess what? We ended up pushing up because it's such a mess in here. It's just not worth trading in. So that's what you guys got to do, especially if you're just starting out. You have to be content not trading. You have to be content not taking anything when price is kind of just like all over the place like this. Now, where's our chat? We had, Jaspinder. I hope I'm saying your name right, but Jaspinder, this is all a range right here, but there's a range right here within a range, right? And the fact that we're holding support over here, yeah, you got it right. Thanks, man. Awesome. We're holding this range over here, right? So as far as like little scalps are concerned, I would stay out of this. But if you break resistance right over here, we're holding support, and we've been creating higher highs and higher lows. I'd be careful around 1830. This is where you really lower your risk. But if you break resistance right over here, could you be filling some of these wicks? About 27, 28 pips, possibly, right? But I think that's the only thing I would take, and I wouldn't take sells until we break 1820. But again, me personally, you're not going to see me trading this. I'm good. Get off that. So does that make sense to everybody? So
Yes.
Looks like TJ's starting to retrace a little bit, right? What I say over here, that I love this setup. Guys in my group, how many times did I say I love this setup right over here? Got this strong bearish candle with a wick to fill. You got a little retracement over here, a weak bullish candle. The next candle past the low of that candle, and we just tank. But guess what? We're in a range. We're going 50-50. So we just retrace a little bit. There you go. We ended up testing that level and retracing. So it's really not worth trading in any of this. I doubt we get anything today. If you guys want me to break any other trades down, not trades, but any charts. And since we were talking about crypto, maybe we could break down some crypto charts. Would honestly be one of my first times because I'm just learning the fundamentals of it right now.
Yeah, let's do it.
Let's do it. What should we break down? Let's see. I got a whole crypto watch list over here.
I mean, Bitcoin is just soaring, so it doesn't really give you much previous data. I think Bitcoin Cash has good ranges.
Bitcoin Cash?
Yeah, I think that's BCH.
BCH,
USD.
okay. Is it much different from this?
Yeah, it has more like of a range it's in. I think, take that back. I think it just broke an all-time high.
Okay. Yeah, but look at this price action. Like, as a scalper on the 30-minute, this is what I look for every single time, right? Like, a nice support. You have this high created. We come right back down, hold support, nice strong bullish engulfing candle right over here. This candle creates its bottom wick past the high of that candle, starts pushing up, little retracement, and we just push up. Right, so now we broke all-time highs over here. We'll mark this support off over here. I'm sure we can adjust. I don't like drawing many levels on the higher time frames because you always have to fix them as you go down. So I like waiting till get to these lower time frames. But obviously, 65,000 was a significant level because that was our previous high that we created up here, right? And then we ended up retracing. Let me just make sure that's right. Ever since I started trading, I realized that I have OCD.
I think everyone who trades has OCD.
In a way, that's a good thing. If you guys read Trading in the Zone, he talks about how people that are fine and kind of imperfect with their thing, they end up being successful traders. But the people that are, let's say, doctors, lawyers, people that are very OCD-like or very everything needs to be perfect, those people tend to be not the successful traders, which is a pretty interesting point that I thought. It's a really good book for mindset as well as trading. Yeah, absolutely. If you guys want one of the best psychological books for trading, and I highly recommend you guys getting the audio version of it. Get the audio book. So if you're in the car a lot, right, you could just listen to it all the time. It's one of those books that you just want to keep on repeat. That's Trading in the Zone. And I'm sure just about everyone in here has read that. Yeah, Audible is the best thing. Yeah, I have 81 books on my Audible. It's kind of crazy. But yeah, that's Trading in the Zone, amazing. Now, a lot of you guys trade basic price action without indicators or anything like that. So if you guys want a book to teach you basic price action and how to read candles, wicks, and all that, read Naked Forex. I'll write these two in the chat over here.
Is my lunch done? Okay. I got it.
Having a good time. So, as we're over here, we ended up breaking 65,000 over here and just kind of pushing up, right? Now we're holding support down here. What could we end up doing? I mean, a lot of the fundamentals I know for Bitcoin are pretty much going up. And if I'm correct or incorrect on any of this stuff, please correct me because I'm not like I could break down a chart easily, but when it comes to crypto and all that, I'm new. Like I'm not gonna sugarcoat it or anything like that. Tony, I'm an expert. I'm new to it. So if you guys want to correct me, just let me know. Looking over here at the weekly, that's where we can adjust our range over here. This is nice, man. Got a nice, strong support formed right over here. Previous resistance. Price just kind of pushing up. Breaking 65,000, pushing up over here. This is the problem with trading crypto and scalping crypto. You have no history to the left. Like on GJ, we can look to the left. Like what I was telling you guys before, when it comes to looking at looking at the market recovery from 2013, right? Price is pushing up on GJ. You have an idea of where price is going to be going, right? With this, you have no idea. Like it's all kind of like a gamble. You're trading price action, but this right in here is a lot easier to trade, right? Once you get in this, because you got this recent price action, you got a nice clean candle to the left that you can possibly mirror. Right over here, once you get into this territory, all-time highs, where's price going to go? We have no idea. Now, Ian, it sounds like you're really into crypto. is there anything fundamentally going on with Bitcoin that besides inflation right now?
I think that's the difficulty with it, because usually I'm not as in depth with fundamentals as VJ or Sharma, but other than looking on Forex Factory, which is not incredibly helpful, I think the main thing is when you hear of large institutional traders trying to incorporate Bitcoin into their portfolio, or you hear countries buying Bitcoin. There's another thing too. We have a channel in our group. It's like a Twitter that automatically sends out tweets when whales, like people who are holding large amounts of Bitcoin, transfer them to different wallets. That also affects the price, and that's me just repeating what I read on a website.
Okay. Wait, where is this Twitter feed?
I'll try and find it for you. I actually silence it because it's basically monitoring the exchanges, and so all you hear is beep 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 beep.
Yeah,
it's like Morse code or something. Let me find it.
Okay.
Give me a second.
Appreciate it. I'm sure that'll help other people too. So yeah, Bitcoin's interesting over here. I want to see my guy Jaden. What's up, brother? He's the there we go. You just have to think about how whale investors work. They don't look at the small 2-time return. So. Okay, I like it. And Ian, is this a Twitter account? Whale Alert?
Yeah, it should be the Twitter account.
Let's check this out real quick. We're just hanging out, watching our currencies range all day. Twitter. How's everyone doing though? Like, does anybody need any help? I know, this is a mix between my group and Sharma's, but anybody that have anything they want to go over? Let's see, well.
Yeah, I mean, I've been getting more into it. It's just more of a matter of, other than the whole buy and hold strategy, is also, you have these different coins, these altcoins. And my question is, are people just buying these coins just to buy it and hold it and wait for it to go up or go down, other than like its use? Because you know how Ethereum, I guess, has other applications that Bitcoin doesn't have.
Yeah.
And then there's all these other coins. And so that's the thing, is like, why are you buying this? What value does it have other than it goes up and down?
Yeah. Yeah, I mean, as Jaden was just saying over here, I look at the same thing. Like the main fundamentals I'm looking at is the fact that it could be a hedge against inflation, right? I think it's part of the future, and I also look at other companies accepting it right now. And the more these companies are coming out saying they're accepting these currencies as a form of currency or a form of payment, then this thing is going to be rising. The value is going to be going up. The more the demand goes up.
Yeah, I agree with that, with the adoption. It's more or less with the different variations in coins, other than the blockchain technology, which is cool. It's the, like, why would you create this coin other than to create something to put money into, but for what purpose?
Yeah. I mean, this is why fundamentals are so important, right? If you're not looking at fundamentals, you don't know where things are going to be going. And it's like trading Bitcoin is the same thing as trading corn. Same thing as trading wheat. Like, you're looking at the supply and demand of what's going on with it, and looking at, like, do people need this right now? Are people looking to buy this? It's the same thing with buying a car, buying anything. The price is going up and down. Same thing with buying stocks. That's how you got to look at trading currencies. So it doesn't matter what it is. It's good to have a good background or a good knowledge of what's going on in the background before you start trading things, instead of just looking at the candlesticks and wicks. And that's something that like I first started learning how to do. Is my mentor was almost 100% technical, like just teach, and it was Raquel, right? He's all candles and wicks. He doesn't pay too much attention to fundamentals. I mean, he knows what's going on, but at the same time, like his main confluence is support, resistance, supply and demand, and that's how he trades, reading these candles and how they work. With me, I want to know why these moves are happening. Constantly asking yourself why or how. How could I be better? How could I be? That's got to be constantly in your head and constantly pushing yourself to be better.
I agree with that. I think, the difference with stocks is even though you only own one share of something, you technically are owning a portion, and maybe you have voting rights.
Yeah.
But see, there's some sort of thing that you have versus with Bitcoin, other than whether it goes up or down. There's no other value to it.
Well, that's the thing that somebody like Peter Schiff is always trying to argue is, Bitcoin doesn't have an actual value, and he's a big gold guy. I've always been a big gold guy, right? Where gold is a tangible product that you can buy, you can sell as jewelry, you can do a lot of things with gold, and it's very valuable, and you can hold it in your hands. You can't hold a Bitcoin in your hands, so there's not much of that behind Bitcoin, other than the fact that it's got a huge demand right now.
Yeah.
And people are accepting it now. It is a form of currency. And I think the more this meta world comes out and more, NFTs are being more relevant and stuff like that, then I think Bitcoin's just going to be driving up. Let's look. That's the weekly over here. This previous support, got a little fake out over here. 65,000 we marked off. Now we can go more recent price action.
We're checking out crypto now?
What's up?
I said we're checking out crypto now?
It's Sharma. Yeah, I mean, we all our pairs are ranging right now.
All right.
So we're just breaking down some crypto charts.
You gotta trade crypto on the 30 second.
What's up?
You gotta trade crypto on the 30 seconds.
On the 30 second, yeah. Yeah, so it looks like, we could be coming down and retest this previous high over here. See if we hold support to continue up. That's the daily. It looks like we're trying to hold the support right here. Oops. Now we got this previous high up here. Got a bunch of wicks that we can end up filling up here if we do hold the support. You get the 1 hour. Now it's the same exact thing. You're trading levels over here. We've been in this downtrend, coming right back down to this previous resistance at 66,000, 66,200. Now we're kind of in this range right over here. Kind of like stuck in here. So what I would be waiting for is kind of a break of this resistance and a retest over here to either continue up and retest this trend line and continue down, or if we end up holding a strong support and continuing up. Let's see the 30-minute. Yeah, I would want to wait for a break and a retest and maybe a break of this trend line over here and a support to form, and then we could take this thing right back up to recent highs. So if you look at, we did the same thing right over here, ended up holding support, previous resistance, retesting the previous high. Same thing right here, held support, we tested this high up here. So we could get the same thing on a bigger scale. But I don't know. I'm a noob compared to some of you crypto people. Taking a look, over here at GJ.
You could essentially, the thing with crypto is you can't use the normal strategies that you would use on it. Like,
That's
you're
good
not
to
gonna
know.
have your fib. You're not gonna have, and for some time frames, it might even work. Lower time frames, especially, because you have a lot more data on lower time frames than you do on higher time frames, right? Or even your
Hmm.
EMAs, SMAs, anything like that. They're not going to work on higher time frames because again, lack of data. So whenever something new comes out, a new asset class, whether it's crypto, whether it's, currencies, whatever it is, think about like initially whenever something is introduced, it all starts off with hype. With crypto,
Hmm.
that's all it was a year ago, a year and a half ago. No one really paid much attention to it until the lockdown, or maybe just a couple of months before the lockdown. So if you go into like higher time frames, like weekly, monthly, for like Bitcoin or any of these, you will see the massive push up, and a lot of it comes from uh, your fun, not even fundamentals. I wouldn't even call it, but it's just like hype from, yeah, there you go. So like hype from people like Elon Musk or other such figures coming out. So there's no actual real fundamentals behind it until recently when countries, and not even like developed countries. I'm talking about like, South American countries coming out and saying like, yeah, we're going to start accepting Bitcoin. Also look at the pattern. You're not seeing the US saying we're going to accept Bitcoin. You're not seeing the UK saying like we're going to accept Bitcoin. It has been countries that have been struggling financially anyways. When it comes to financial institutions where majority of their population has little to no access to corrupt free financial institutions. That's
Hmm.
where crypto is coming in because it provides you that transparency.
Yeah.
And then you got China. The Chinese government keeps banning it. And then
Yeah,
they
exactly. That's what I'm saying.
It's another fundamental there for you.
Yep.
That's how you know you need to get it.
Yes, exactly. James over here asked if we could break down GA, so we could do that. Wow, I haven't traded GA in a minute. I don't think I've ever traded GA actually. Maybe I did some breakdowns on it. Wow. This is all right. So we obviously have a little downtrend over here when it comes to the higher time frames over here, and then got this bullish trend that prices. It's like a pennant, like a flag over here, where price is kind of just ranging now, right? And then, as we said, our more recent or more important breakdown is the support and resistance of these pairs. Got more people coming in here. So right now we're kind of in the middle of this range right over here. Our previous support over here and our more recent resistance. And if you guys ever have issues breaking down the chart and start getting confused, I know that that's very common when you first start trading. Just look at the more recent support resistance, right? So we're in this huge range over here. Where's our more recent resistance on the monthly? It's right here. More recent support on the monthly right here as far as the main support. And then you got this area right here, which I was planning on doing on the lower time frames, but we'll do it here. All right. So looking over here at the weekly. Now you said, just so you guys know, I'm running the Zoom. So if you guys send me a direct message, everyone can still see it. You're going to sell based on the previous 4-hour candle close. Mind giving me some insight. Okay. So we're on the weekly right over here. This is a mess. So it looks like we're holding support right here on the weekly. So the previous 2 weekly candles, he had a doji candle and a clean weekly candle currently. And you got this previous resistance support now holding its support as well. So maybe we're rejecting 184 over here, looking at the daily. Oh, okay, I see what you're doing. So we're bouncing off this area right over here. Right? More recent support resistance. The previous resistance right there. What I'm looking at over here is a hard rejection over here, but we did have a higher low over here and a nice support formed with this candle right here. Looking at the 4 hour, okay, this makes sense. So again, more recent support resistance. You got that level right there. Previous support that we could be coming down. Current 4 hour candle, I like it because you have. Here, let me annotate. Just like we were looking at gold at 1830, what was happening over there? You got the same exact thing, right? What happened over here? We ended up creating this low, retesting one more time, and then just coming right back down. So could we be creating this low? If you take a look at this candle, could this end up being that same candle? Right? Something very similar, where we get some kind of a reaction in this area. And then we retest right up here. And then we continue right back down. But I mean, we could very well push right through here and continue right back down to this support over here. But so you're taking this based on the 4 hour, but was your entry on the lower time frames? Let's take a look at the 1 hour. I like this setup. This is my ideal setup right here. Break, retest, forms this low, comes up, grabs liquidity, and we end up printing a candle like this. This candle ends up filling the wick. Yeah, that's a 32 pip candle right there. Like this is a perfect setup. I look for it every time, specifically on the 30 minute or the 15. But having this on the 1 hour, give me that all day. But I don't trade this pair. How are you feeling with this trade right now? You could end up getting a reaction right in here and in profit. Cool. Yeah, you could be getting a reaction in here, previous resistance. You got the 50 EMA over here as well that we could be tapping into. So that's where you could get that retracement a little bit and then continue down. But I like this so far. Only thing is, you are above both EMAs over here. So you're above the average price of the past 200 days on the 1 hour. Entered at 183. 3665. Perfect. So did you enter after this candle closed? If any of you guys trade GA right now, and if this is one of your pairs, this is something that you should be journaling right here. This trade. Like I said, you already got 32 pips over here, but this is a 39. It's a 3-to-1 risk to reward, 39.1 pip take profit. So this could be a good trade. GA last night. Okay, cool. And what did you take, Jan? Aiming for longer move. Okay. Let's see where this could be going. So since here, this is where trend lines come in handy. Right, so 4 hour. So if you take a look, this was our recent bearish trend right over here. Printing lower lows, lower highs, perfect, right? We create this new low, and then we create a higher low over here. So price looks like we're trying to hold support over here and break out of this bearish trend. But right now we're holding the previous resistance over there. So right now we're kind of ranging in here. But at the same time, after we're reacting, this is the move that you're playing off of. We're reacting to this resistance up here, right? You could be getting a play right back down to this area to retest this bearish trend, hold support, and then we can continue right back up. Scalp buys. Okay, Oh, so you took something over here up to 184.2? 183.4. Beautiful. I'm close to break even and letting price hit my first TP. Okay, cool. Yeah, so I can see price coming down into this area over here and holding support. You got a nice clean move right back down into that area anyway. Maybe holding support to continue up. Really got to see. And that's where fundamentals come in. You got to look at the fundamentals of what's going on with these two pairs or these two currencies. So let's go back to our original pairs. Let's see what we got over here.
I want to add that we're going to have CPI in 30 minutes. So if you guys are trying to get into those fundamentals, trying to understand how does, market sentiment, fundamentals, and technical analysis play together, look at GJ and especially look at gold in the next 30 minutes or so. So look at the 15-minute time frames, look at the 30-minute time frames, look at how whatever levels that they're bouncing off of is also playing into those higher time frames. So I was doing my own analysis on the side right now while looking at yours. I'm looking at gold and I'm looking at the daily time frame and the 4-hour time frame. So I came from higher time frames like the monthly, weekly, daily, and then I kind of just stopped at 4-hour because I see price bouncing off of these areas.
Oh, yeah.
And so I see the 1815 level. Excuse me. The 1815 level is what I have. I'm like also having breakfast while you're talking, so that's why I'm like quiet here. But I'm here. But I have 1815 marked off from the monthly time frame. That's the range that price has been stuck in. And then, yeah, so right above that.
1815.
Yeah, right above that. There you go. That's what I have marked off. 1815 and then 1755. And then when I drop down to the weekly time frame, I created a zone right above it, going all the way up to about 1825. Right, that's just the weekly time frame zone, but more like, let me see if I could annotate here.
Yeah, I've had 1830 marked off for since the beginning of August.
Yeah.
Like, this has been a significant level, previous support. But yeah, this is 1815, actually, significant. Where
right
these
here.
candle bodies are closing?
Yeah, like right here. Okay. So this is the zone, and then I drop down to the daily time frame, and then the 4-hour. So the daily time frame, you have that retest candle, right? So this is pretty much what all of this kind of that zone. This is everything that falls into that zone. And so what I see right now is, okay, we finally broke above. We're coming back and retesting the highs. Are we going to be able to hold on to that zone that you have marked off right here? Right, and you see that on the 4-hour time frame as well. So if this current 4-hour candle pushes up bullish, I have 1827 marked off. Above that, you got a quick scalp coming up.
This is the daily. You want the 4-hour?
Yeah, off the 4-hour now. So on the daily, this is what I see, and then on the 4-hour, I see this area, exactly that support that you marked off, right under the current 4-hour candle. The current 4-hour candle.
Right here.
Yeah. So if that 4-hour breaks right here, you got that quick scalp coming all the way up to 1830, right? Or even higher. So that entire push up that we see right now, this pullback, so you have that entire push up that broke above that 1815 and is taking you to the upside after this quick consolidation. That's that retest if this area here is held, right? Given like CPI comes in the favor of gold. And then you start pushing up, that could help you come right back and revisit this levels. Maybe even close as like a weak bearish candle on the daily time frame, and then a continuation up tomorrow.
Yep. That's exactly what I was saying while you were getting your breakfast. If you take a look at like the 1-hour now, like we're just stuck in this range right here. But the only play, I was telling them, like I'm not even going to be trading in this, but the only play that I could see us taking is if we do hold this support over here, we get that close above 1827. If we get that close above the area, you could take the scalp to retest this high. I'm just, me personally, don't listen to me, but this is just how I think. I'd rather kind of just stay out of this area around 1830.
Yeah.
Especially, I mean, we do have CPI coming out, but we need a lot to break us out of 1830. 1830 is a very significant level over here.
Yeah, it's coming from the weekly, it's coming from the monthly. So yeah, like when you drop down to the hourly or 30-minute time frame, those levels aren't just going to help you break completely past it. But you have to set up for it, and that's how you're going to set up for it on the lower time frames. So as soon as you tap into, like, let's say the bottom of that zone that you have marked off, which could be like 1828 or 1830 or 1829 right here.
Mm-hmm.
Take your partials from that scalp. If you want to let runners go to test if price is going to come back to these highs, you can do that. But understand, again, it comes back to the limitations of your trade. Understand what's the restriction of your trade. This is the restriction of your trade. You're not going to break past this based off the 30 or the 15-minute time frame.
Yeah. One thing that you guys could be doing as well is taking a look at the indices. So take a look at the dollar index over here and what that's doing, right? We've been in this bullish trend over here, but we keep holding 94.5 as that resistance, right? So that's a significant resistance, but the dollar's holding a support right down here at 94 or a little bit below 94. So we're just kind of like pushing up over here. But now, this is the 4 hour. Now the 4 hour is starting to reject this certain area. So that's why you see gold currently on the lower time frames. See how we're kind of retesting this previous support, previous resistance as well. We're starting to retest and come down. That's why you see gold over here kind of holding this support, right? Yeah, I like waiting for a range like this to kind of break out of. We are holding support, like Sharma said. We could definitely take this up to 1832 possibly. See, GJ got that nice push off of 152.800 over here. Nice, strong, engulfing candle. I can see us coming up into this area, especially with a candle like that. Unless we just start to range, kind of like what we did over here. Clock. We have. $30 minutes for CPI. I feel like both Wednesdays that we've done this, we've gotten ranging markets.
Yeah, but I think today we might get some good moves.
Nice. It's Wednesday.
Yeah, and even the last month and coming into this month, there's a ton of stuff that's already happened from like a fundamental perspective when it comes to inflation and everything like that. So I think we might get some good scalping opportunities, not so much of swing trading, unless we're able to break past that 4 hour consolidation. There's a ton of uncertainty happening where now you have people from the Fed, their terms are up, or it's their last term now. And now there's other people coming into place.
That's why I think you guys saw some of the indices drop yesterday and the day before to start the week, because I think Biden is meeting with Powell and trying to decide who he wants to run. But the main thing is, like, we know Powell's stance, right? We know where Powell sits. He's really a centrist, kind of sits in the middle there, not really too hawkish or dovish. But like with somebody new coming in, there's a lot of uncertainty there with monetary policy.
Yeah. Even if you could bring in someone with the same exact, let's say, viewpoint, you're always going to have different policies. They're always going to try to do it a slightly different way. It's the same exact way as like traders, right? You could bring in someone who's a scalper for example, onto the charts, but they're always going to have a different strategy on how to go about it.
Mm-hmm. I'm going to use the bathroom real quick.
Yeah, for sure.
So, let me do this. There you go, Sean, if you want remote.
Thank you. I'm looking at some of the fundamentals on the side, so on Bloomberg, just setting everything up again.
Hey VJ.
Hey, how's it going?
All good, all good. I was just gonna ask, you still have any positions on GJ running or?
Give me 1 second here. If I didn't get stopped out last night, no. I do still have the 154, 366 area.
Oh, from last week. Nice.
Yeah, from interest rates.
Did you just trail your stops or you just left break even?
Nope, trailed my stops. I keep trailing my stop every time. The 4 hour or the daily time frame kind of creates those.
That makes sense.
Yeah, those lower highs and lower lows. It's fun.
It's like clockwork for you, right?
I mean, we all took it together, so I'm pretty sure everyone's having fun.
Yeah.
Yeah, it's like 143 pips in as of right now.
Nice.
So hopefully we get some more scalp opportunities to look for another scale in.
Mm-hmm.
But I'm waiting for that 152, 900, 153 area to be broken. And that's coming from like higher time frames.
To be honest, I'm kind of looking at gold today with the CPI data coming out, but I still got my eyes on GJ.
Yeah. That's the same one that I'm looking at. It seems like it's pushing up. It's giving us some good confirmations. But we'll have to see. We'll have to break past some of this consolidation. Did Stefanos go through the fundamentals already?
I joined a little bit late, so I'm unsure.
Yeah, he did.
Oh, okay.
Yes, I did.
All right. Awesome.
You can go over more if you have something else.
Well, what did you go over? Just like a quick gist.
Basically, why these pairs are where they're at right now.
Okay.
Especially GJ.
Okay.
Which, I mean, that kind of answer is very broad. But yeah, it's just like why is GJ ranging right now? It's because you got Bailey coming out and the Bank of England coming out in Boris Johnson style, saying they're gonna do something, then they don't do it.
Yep.
But yeah, what they. Okay, Jaden wants a EJ breakdown, so we could do that. But what's it called? Yeah, we're sitting there because they didn't increase interest rates this month, and they said if we get good data, next week on the 16th for the jobs out in Great Britain, then maybe they can increase interest rates in December, but they don't think they're going to be doing it until February. So with that going on, and then also the uncertainty with Brexit, we're kind of just sitting.
They're not going to be increasing interest rates until, they have like employment that they're talking about, but there's also a lot of back and forth that's happening within the Fed when they're talking about employment. So what the back and forth is all about is now the standards are pretty much dropping when they're talking about employment. So you had all these different metrics that they were looking at when COVID first started, when this recession started happening, economic correction, whatever you want to call it, started happening, that they need to hit certain numbers and certain demographics in order for them to qualify as like, okay, we're hitting pretty good employment numbers. And now, like, slowly you're starting to see that bar kind of just dropping down. And so some of the sentiment within the Fed itself and like all these other, I guess, officials in the financial sector, the sentiment is, well, you're dropping the standards of it, so all you're really doing is setting us up and kind of, painting this false picture that, hey, everything is going great when it's really not. And by you painting this picture and then tapering and increasing interest rates and doing all this type of stuff, essentially what you're doing is just setting us up for failure like it happened last time. And then some of the sentiment is like, well, we only need to hit a certain amount of percentage of employment for us to say that, okay, we're reaching that dual mandate or we're reaching that maximum employment. We're not there yet, but we're getting there. So there's that back and forth that's happening, right? And so it's the same exact thing in the UK as well, where they're not going to increase interest rates until they start seeing some positive, actual, real data coming out, because they understand what could be the side effects of all of this. So yeah, you're having the UK, saying like, okay, being the first country, first of all, to open up, being the first country to say on a federal level, you don't have to wear a mask, you don't have to socially distance, but it's on the ground level in certain cities, in certain regions, like those people, administrators, or whoever you want to call them, looking over and actually still implementing these rules. But they're still not going to increase interest rates until what they're still playing off of, which is COVID. So yeah, you have positive data coming out for some of these things, but also you have COVID cases rising. So you increase the interest rates, and you're starting to get ready, and you're painting this picture of, well, everything's going great, but you have rising COVID cases. And so what are you really risking? Either going back into another lockdown until the government kind of figures out exactly how to take the next steps without going into a lockdown, or you just continue pumping money into the economy. But the US is still tricky, because what a lot of people are missing is the bigger picture with this administration, which is the Build Back Better plan. Everything that they're coming out with is with the purpose or with the intention of, we're going to take down everything that is pretty much against whatever they're going for, and then build it back better. So there's a reason why we keep, inflation is kind of getting out of control and everything, but there's a reason why they keep saying that it's just transitory. Well, first of all, they're not going to say like, yeah, we're in like deep stuff, because now you're scaring off people, and that just makes everything worse, right? And so everything that you look at, the infrastructure plan and everything else that they're trying to pass, all these bills and proposals and everything like that, it's ultimately playing into that Build Back Better plan. All right, we got the new hourly candle on gold.
Oh, I forgot to tag you, Sharma. I just put a video up.
It's all good.
That's what I'm doing.
Did you want to do the EJ breakdown real quick?
Yeah, let's do it. Let me just delete this, then tag you.
I forgot.
Jaden, you in EJ right now?
I'm looking for a buy. I set my chart in the New York session thing on Slack.
Yeah, I just saw that. Ooh, I like it. So are you already in the buy, you said, or you're waiting for this?
Waiting for it.
Okay, cool. This, for your reference, guys, this is Jaden's chart over here. I like it. So you're just waiting for this retest over here to take this right back up. So, good old EJ. It's been a while. So, Sharma, did you want to break this down? It was kind of.
Yeah, let's do it.
All right. Here, I'll just erase all this. You have remote control?
Mm-hmm.
Cool. Take it away.
All right, so the very first thing that we're going to do here is look at the most recent support resistance, tapping off of these levels right here, and then I would just extend that over to the left and take a look at what's going on there. So that's your resistance, the current monthly resistance. If you break that, then you're headed up top here, right? And then the most recent support as well, which is right down here. So you got consolidation to the left. You got that nice break and retest from, this entire support area. And then if you extend that line to the left, you would see how we're tapping right into these areas here as well, right? So you're sitting at a pretty key level. Essentially, it's the same setup on higher time frames that we have been seeing from GJ as well, where you got that nice bullish push up towards the end of the year last year. And now we're starting to see that little bit of a corrective move back down and coming back, tapping right into those higher time frame levels, perhaps collecting more orders, and then bouncing back up to maintain that basic bullish structure that we look for. So that's the first thing that you're going to do on the monthly time frame. All right. Oh, do you want to mark off these levels as I'm speaking as well?
Yeah.
All right, cool.
Yeah, so let's get right to the monthly.
Yeah. There you go, that support, and then just extend that over to the left.
Yeah.
Mm-hmm.
There you go.
And then the resistance. So someone was also asking about gold on YouTube. So I just saw the YouTube chat. So we'll get to that right after EJ here.
Awesome.
So actually, I would mark off if you go back to the monthly time frame.
Monthly.
So that's the level that we can go up to next as resistance, but the most recent one that I would mark off is the current one right here.
Okay. If you guys can send your charts as well on some of these pairs so we can see what you're thinking, it'll help us help you.
Yeah. And then same thing, I would extend it at least like from to back here, if you can.
Got it.
There we go. Fantastic. All right, so on the weekly time frame, what do we have happening here? You have that nice bullish push up that we see to the left, continuation up. Now you got that nice pullback. You got a nice consolidation here as well, collecting orders, right, at that previous support that price made here. And now you're starting to push back up. Same thing here, you're not just going to shoot up. Remember this basic structure. If you don't remember anything else, or you're still trying to find your strategy or whatever, just remember this basic structure for a bullish trend. So you're going to have that pullback. What did you essentially do here? You broke out of this consolidation here without any sort of retest. In just 1 week, you just broke out of that. Now it's taking you 3 weeks to pull back, 3 to 4 weeks. That itself tells me that, hey, we have a lot more bullish momentum in the market than bearish. If anything, this is just a corrective move. So as long as we can hold on to this area as support, retest it as support, and continue back up, you can essentially catch the same exact move that you would have missed here. Now all you have to do is wait for a support to be formed here, continuation up. By the time you tap into this area, take partials, be completely risk-free. Once you break above that, that's that monthly resistance that we have marked off. So wait for another retest and then a continuation up. You're already risk-free from the first trade. So all you're doing is reinvesting those profits into this next trade. And again, be risk-free by this point again. So there's not much else that you're going to add on to the weekly time frame besides this level right here.
Do you want me to mark that off for you?
Yes, please. There you go. Yep. So is that level going to be retested or not? So when we drop down to the daily time frame, we see how long price has been rejecting in these areas. You have consolidation right at that level, right? Not once, twice, Matter of fact, 3 times, and then of course you have that entire consolidation here as well. So you got that nice pullback that's happening. You could create a zone here as well, right above the level. So right into this area. So if this area is going to be held and we push right back up, then you got that nice bullish momentum, just to mimic whatever's happened to the left that you may have missed last time here. And then you could take that nice push back up. By the time you tap into this consolidation or even this zone, be risk-free. Anytime you're about to go into a consolidation, be risk-free. Take your partials, trail your stop loss, whatever your risk management strategy is, do that. And then as price breaks above this, same thing. As you continue bullish, you could start it off as a scalp, matter of fact. Take your partials there and let the rest of it run. So there's not much else to mark off on the daily time frame here. Then I would drop down to the 4 hour. Yep. So on the 4 hour, what's happening right now? You got consolidation right above the level. Right here. And so I would mark off this area right here, and then if we can break above that and continue bullish, you got that nice scalp. If you're looking for 10-15 pips, that's your thing, go for this move right here. If you're looking for something longer, you got some nice moves all along the way. And then by the time you tap into this area right up top here, this is your consolidation that you see on the daily time frame. You should be risk-free at this point. That's 100 pips.
100 pips once we break this level over here.
Yep. So be risk-free, and you got a risk-free 100 pip trade moving.
Yep.
So since the 4 hours consolidating and we're waiting for price to break above that, I usually don't even drop down to the 1 hour or 30 minute, but you can if you're just looking for a quick scalp and you're comfortable with trading between this range until the 4 hour levels are broken.
You never do, or you just...
No, I don't.
Just on something like this. Okay.
Because if the 4 hour is consolidating, I mean, if I'm looking for a scalp, like today's CPI, we're going to look for scalps. Or NFP, look for scalps. Interest rates, scalps. Other than that, I don't even drop down to lower time frames because the 4 hours consolidating. If anything, if you drop down to 1 hour time frame right now, you're just going to see this being even messier.
You're saying in a consolidation, you're not going to drop down?
Yeah.
Oh, okay. I thought you meant like that's... You just never drop down to those time frames.
Oh, no. If the 4 hours showing me clean moves, then I'll drop down to the lower time frames. If it's showing me consolidation, then there's no reason to.
Yep. That's why, that's what I do on gold. Like, I never really drop down those lower time frames when we're in such a range like this.
All right. Yeah, so then let's take a look at gold. You want to take a look at gold real quick? So someone was asking about gold as well.
Yeah, we got gold right over here.
All right, awesome.
Gold, we're starting to break above that level.
Yeah, so this...
Was he not on?
I'm not sure. He's asking about CPI and gold.
Okay.
But yeah, so we're not going to do the entire breakdown if you've already done it, because this is going to be posted on YouTube anyways. But you see the levels that we have marked off here, so you could kind of mark that off onto your own chart. The calming effect on YouTube. So you could mark that off onto your chart as well, and then you could take a look at, why these levels were marked off, go across time frames. But right now, what you guys are seeing is fundamental and market sentiment playing into the market. You have 9 minutes before CPI comes out. You have people who are trading purely off of fundamentals, and you have people who are trading purely off of market sentiment. Yes, they exist. Right? So this is what you're seeing happening right now. So if you want to drop down to the 30-minute time frame real quick, Stefanos. All right, there we go. So now you have that 30-minute consolidation, right? That price is trying to break out of. So even if you just extend that resistance that Stefanos has marked off right now at the current level, and you just extend that over to the left, you're going to see how that was also a previous consolidation resistance. So it's a very strong level. So now, right now, pretty much the sentiment is, well, inflation is still a concern. It hasn't really gone away, right? Things haven't really improved with inflation. So now, if the same exact data comes out where inflation is increasing and there is no improvement whatsoever, or even if we stay at the same exact levels, you could see gold pushing up right into the 1830 level. But it is a high impact fundamental. You have to give it 5 to 10 minutes, or I would give it 5 minutes since it's such a high impact fundamental. Give it 5 minutes right after the news comes out. You need to give people enough time to kind of readjust their trade. So right now you're seeing this nice push up and everything that's happening. This is all fundamental, based off of fundamentals, based off of previous versus expectations, based off of market sentiment. Those are the people who are pushing the price up. What do they do? If you're trading purely based off of fundamentals, what do you do when fundamentals come out? You'll adjust your trades accordingly, right? If the fundamentals are in your favor, exactly what you thought, you're probably going to be like, okay, well, you're already in profits because you've already entered on these candles here and you're moving to break even, whatever the risk management strategies would be for you. Or if the fundamentals are against you, then what do you do? If you're a technical trader, what do you do if the candle just flips bearish and goes against you?
It's cautious.
Right. And so that's the same exact thing that these people are going to be doing too. This is all purely based off of previous versus expectations. You don't even have the actual coming out yet.
Yeah.
So I hope that helped.
Always does.
Did you guys end up taking a trade this week at all?
I barely traded this week.
Mm-hmm.
Yeah, there's not much that has appealed to me on GJ or gold.
Yeah, same.
That's what I was explaining to them before. Is like you got to be content not taking a trade
Mm-hmm.
and being fine. Like if you don't see what you like, just sit out. But that's where that second pair comes in handy, because maybe if you don't see what you like on your one pair all week, maybe you have that second pair that you could be trading with.
Yeah. So that also kind of depends on everyone's situation, right? So we always say, well, I personally said don't ever go over 3 pairs, no matter how many years you have been into trading or anything like that, especially if you're a scalper.
Yep.
But there's people like, who could handle having 1 to 2 pairs. We predominantly trade just gold and GJ. But there's people who are like, they will analyze both and they will try to catch both trades. If you're scalping, that's the worst thing that you can do. Right?
I said the same exact thing before.
Yeah. And so if you're scalping, you could have 2 pairs where it's like, well, GJ right now is consolidating, but we are seeing potential moves setting up for gold. And so understanding that maybe you're only going to trade gold. But if you see, potential setups on gold and GJ, then you have to decide like, oh, which one do I want to go with? Right? And that's the hard part, because everyone wants to be part of like every move. And it's human nature.
Yeah. I personally don't see an issue with having the 2 that you're trying to choose from, but when you have 3, it's like, all right, you gotta calm down a little bit.
Yeah. I personally have 3, where 1 is for swing trade or even potential swing to position trade opportunities. Then I have 1 that's just, all right, scalp the swings. And then I have another one which is, well, this is only scalping. This is something that I change my pairs every quarter. I switch one pair out every quarter. And so I will watch a pair for an entire quarter, and then I will see how is it moving. And then the following quarter, I'll go ahead and try to scalp that after I have enough data, pretty much. After I have enough screenshots, after I have enough journal trades or potential journal trades and all of that, and then move into it.
We shall see what we get.
Mm-hmm.
Anybody have any questions?
Yeah, I do. What do you mean by looking at a pair for like a quarter? Like how long? I'm sorry, but I don't know what's a quarter. Like
3 months.
All right, cool. Thank you.
Or 4 quarters in a year.
Thanks.
Yep, just look at it. And then essentially the way that should start off is, okay, well, how does this pair move in different sessions? back test that. You don't even have to live test it if you don't have the time for it. And then the next step should be, okay, well, now I see that this pair, for example, GBP USD, for me, the setups that I look for, it moves best in London session. So if I want to trade GBP USD and scalp it, then I'm going to have to scalp that in London session. Or maybe even pre-New York, right before New York opens up. And then it goes into, well, now do I want to, well, you're going to start off with scalping it first, obviously. And then it's like, well, do I want to turn that scalping to a swing? Or do I only want to keep this as a swing pair? Like, that kind of making that decision. What is that pair going to be used for? And then you start getting into, okay, what kind of entries am I looking for? Your entries are going to depend on what kind of style that you're going to use that pair for. If I'm going for swing trade and then I go into, okay, how am I going to look for my entries? That depends on the hourly time frame, that depends on the 4-hour time frame, that depends on the daily time frame. That's how I take my swing trades, if it's purely swing trades. And then if I think, okay, if it's going to be a scalp to swing, then I drop down to, okay, I can potentially start this off as a scalp, but I'm going to need to make sure that the 30-minute aligns with the 1 hour, 1 hour aligns with the 4 hour, the 4 hour aligns with the daily, things like that. So your setups are going to depend on, and your entries are going to depend on how you're going to use that pair.
Right. All right. Thank you.
Yeah, of course. All right, we got a minute left. Or actually, a couple of seconds.
Here we go. Whoa.
Yep, there you go. People adjusting their trades.
Yep.
So now here,
Wow.
the expected was 0.6%. It came out much higher than that. Generally, yeah, CPI, if you click on that folder next to it, it will say usual effect, actual greater than forecast is good for a currency. Well, what does CPI really stand for? Inflation. If you're in, let's say, a recession, then, inflation and all that stuff, or like you're in a recession moving into growth, right, might be seeming favorable, but not right now in the current economic conditions. So you have to play all of this stuff into current economic conditions and understand what's going on right now. It came out.
This is stagflation.
Yeah, this came out much higher than previous. Forecast is estimates. No one really care about that, right? People care about what was the previous. People care about what's the actual, because the current actual is going to be the previous for next month.
And data like this can cause the Fed to start tapering even quicker.
Exactly, because this is stuff that they're looking for. And they will tell you that in their monetary policy statements. All right, well,
but if this is an indicator of inflation, that would negatively affect the dollar, right?
Mm-hmm.
But then gold is
It's too much supply of it.
There's too much supply of the dollar, is what Stefanos is saying.
I see.
Yeah. Like when there's too much supply of something, the value goes down. And then it causes inflation.
These are people adjusting their trades. All those people who got in for that bullish momentum. So give it a couple of minutes. You will see wicks being formed. Massive wicks.
Yeah. Yeah, this will be interesting.
Mm-hmm.
All right, we don't need that anymore. So yeah, personally, I see price really reacting to 1830 again.
Mm-hmm. We're just stuck in that consolidation.
What's up?
We're just stuck in that consolidation from the 30-minute, 1 hour, 15-minute.
Yeah.
All the market's really doing is collecting orders.
I think below 1820, you're gonna have a safer sell we break out of all this,
Mm-hmm.
got a cleaner move over here. And then if we break 1812, we got the real clean move going all the way down.
I think we
the
could still
same
have
shape.
clean moves. We just need to wait for these candles to close one way or another.
Yeah. Exactly. Patience.
Yep. Drop down to the 30-minute real quick for gold. There you go. Look at that massive bottom wick and then flipping.
There you go. Wow.
Yep. So you give it a couple of minutes, you see that adjustment happening. These are people reacting to fundamentals and market sentiment. Look at that.
Jesus Christ. I was so right.
But would I take a trade right now? Absolutely not. I'm going to wait for this candle to close. At least the 15-minute.
Yeah, no.
Because then where do you place your stop loss? Jita has a nice setup right now, though. So that is something that I might potentially be interested in.
He did us?
Yes, the same thing.
Yeah, that's
Bottom
a nice bounce.
Yep.
Sheesh. Did not expect that from gold.
Yeah, it's on the 30 and the 15-minute. So what I'm going to wait for here is, you see how price is reacting to that support to the left?
Yes.
Right.
Right over here?
No, right here.
Okay. Oh, currently, yes.
Yeah. So if price can break above that and close above it, that's what I'm looking for. Break and close. I want that confirmation. Then I'm looking for a trade potentially coming back up here as a scalp, and then runners for looking at higher time frames, and then for however long you think it's going to run.
Okay.
Excuse me.
35.
So even in moves like honestly, like when I look at moves like this, a lot of people would be like, man, I should have just entered this and that. I personally wait. This is the move that kind of excites me, because either right now all these buyers are about to get rejected and it's going to be a massive top wick and you're coming right back down. And then there's going to be great moves on the other side. Or we close above these levels, which are obviously higher time frame levels, right? 1835 and all of that. And then we could look for even better scalps to the upside. So I just wait for those close. That's what I get excited about.
Yeah. Wait for the reaction.
Mm-hmm.
All right. Sharma, what do you got today?
It's talking to me?
Yeah.
Yeah, what was that?
I was saying, what do you have today?
I have to drive out to San Jose, so it's going to be another 2-hour drive right after we're done with the session here.
That's right. You got a presentation?
No, actually, well, we already did that. And the dean is on board and everything. Now we're having a team meeting, so I have to go out, meet the new engineers and everyone that we have, and then get started. We're still looking to launch in January, so everything's moving very fast.
There you go. Keep that pressure on.
Yep, it's exciting.
I know. Awesome.
What about yourself?
Heading up to the city today.
Mm-hmm.
I got a client today, and then are we shooting that podcast today?
I won't be back until like 4 p.m.
Okay. 4
Yeah.
p.m. PST?
Yeah.
Gonna get cold. Sheesh. Oh. Wrong pair.
We can do it tomorrow if you're available.
Yeah, let me double check. Schedule for tomorrow. Tomorrow I could do earlier in the morning, probably after the stream,
Let's see.
or maybe around like 11 a.m. EST.
Yeah, I could do that.
Okay.
Let's do 11:30. Does that work?
I feel like I love how we're on the stream right now.
Yeah, we're still on the stream.
Gold.
Yeah, pretty much have availability until 2 p.m. PST.
Okay.
So now if you guys look at GJ on the 15-minute time frame, you're gonna see how it broke the top wick and the bottom wick.
Keep projecting over here.
Yeah. This is the 5 minutes on the 15. So when price breaks the highs and the lows in the same candle, that's indecision right there. Those are buyers and sellers getting rejected. So that's why you gotta wait for the candles to close. You're not trading actual data coming out. We're not analysts, we're not economists, we're traders. We're gonna trade the reaction.
Mm-hmm. So the 5 minute just closed a strong bearish candle.
Mm-hmm.
Keep projecting this area down here.
The funny thing is we have consolidation across time frames, even coming down to 5 minute.
Oh yeah. Yeah, this is why I'm never really appealed to trading in here. Rather just wait for the breakout. Yeah, nobody has questions or charts?
I actually have a question.
Cool.
So I was looking at GU and I did I did an analysis. I marked up my charts. I actually ended up entering a trade earlier this morning that I got stopped out on. And I just wanted to get your guys' thoughts on whether you thought it was a valid entry or not. So it was on GU, and I can tell you where I entered.
Do you want to send that chart over?
Yeah, sure. Give me 1 second.
We'll pull it up.
Look at that flip bullish.
Yeah, on GJ?
Yep.
Yeah. Yeah, we might be breaking resistance over here.
Should I just send it in Zoom chat, I guess?
Yeah.
Okay.
Just in the link. I'll pull it up. I actually have to get going shortly.
I actually for mine, I took screenshots, so I'm not sure if I'm still able to send it over.
How can we do this? You're in Sharma's group, right?
Yeah, I am.
Okay, you want to send it over to in her group, and then
Yeah, I'll
do
screen
that.
share.
Since you could send it to me,
Sounds good.
we'll bring up G. You said GU?
Yeah, it was GU. So I'll send it in the technical charts.
Or just send it in New York session.
Okay. Cool.
Yeah.
It's a nice setup over here. Looks similar to GA that we were just breaking down.
So we don't stream daily. We stream on Wednesdays only. Someone was asking that on YouTube. Maybe we'll get to daily. We'll see.
I was thinking that. And then I was like, all right, let's start with Wednesdays. We'll see how we do. All right, GJ's breaking up. What is this? Look at that move. Indecision.
Yep. So now after this candle closes in just a couple of seconds, that's when we want to start looking into, all right, what are some potential entries? So in this case, what I would be looking for is just even a bottom wick rejection right into that 153 area and then push right back up. That's a potential trade for me.
Mm-hmm.
So tell me if this works, Stefanos. I just sent the link in the chat.
Awesome. Thanks for sending, buddy. Ooh. Okay. This is on the 30-minute. So you ended up entering here basically at the bottom, right? You already had such a overextended bearish move over here, and I can see what you were doing. One thing that you want to pay attention to is when these candles don't have wicks, right? Because they end up being, it's like a 50-50 candle. They could very well continue, but at the same time, they could very well rejected that area, where you end up getting a candle like this, where it creates this bottom wick and then starts flipping bullish, starts retesting this area up here. So whenever you see a move like this, don't get the FOMO where it's like, all right, I need to grab part of this move. Also pay attention to these wicks right here. But let's look at GU over here. Let's see what you were doing. This is a nice move where if you take a look, yeah, obviously this was last night that you took that?
No, this was actually this morning. I just saw I saw the break and retest, like breaking one of the like that level that I had, and then I entered. Yeah, right. So that was kind of my thought process. That was a strong consolidation resistance, and I saw the break and retest on the 30-minute. So I was thinking, it could be a good play, but then I ended up getting. I'm not sure if it would be considered a fake out, or maybe it was just like wrong timing for the entry, or maybe the stop was too tight. I'm just trying to run all those different scenarios.
Yeah, no, 100%. It's if you take a look over here, Kim coming in, you have a nice clean move to the left. That once we broke this consolidation up here, we ended up mirroring the entire move. We filled these wicks, but we mirrored the whole move right down into this area where we now have another consolidation over here. So that's the area that you were running into that it started to reject off of. Right. I think you sent another screenshot. Let's see. Okay. So yeah, it's the same exact thing. We just mirrored this candle perfectly. Mm-hmm. Right over here with this candle. This candle kind of mirrored this one as well. And we just pushed down. But now we're starting to get into this area over here that you just want to pay attention to and watch out for. That's where it gets sticky. I can see what you were doing though. You're looking to bring price right back down to this support.
Yeah, exactly.
Yeah, and you kept your take profit a little bit shorter, which is smart too. So you put your take profit right there. But again, just pay attention to those candles, right? Let's get rid of these. Yeah, pay attention to these candles right over here, as you have no wick right here. This is where it's so overextended. You want to wait for some kind of a retest, a liquidity grab before you take price down to retest this low.
Gotcha. And I remember on the 1 hour, I saw that. I think on the 1 hour, I think the 1 hour had just created a bottom wick. So I was just thinking like maybe it could get filled, but no, that makes sense just in terms of being aware of those. The bodies of the body of the bottom candles, just to make sure that it's a good, like a smarter entry.
100%. Let's see. We'll put this right here. Again, we mirrored these two candles right over here. This is a beautiful move right here. Like, if you could have grabbed this one, this is one of those trades that you want to journal.
Mm-hmm.
Where it's so easy. You got that clean move to the left that you mirror. But the 1 hour, again, we're getting into this area. This actually, the previous 1 hour candle, actually, let's see what that was. Oh, okay. So that's what ended up happening. You were part of this wick.
Right. Yeah.
Part of this candle. This caught you. We ended up filling that candle right over there to continue right back down in this area, but we're starting to reject again. But yeah, when we close like that, you may want to wait for another retest like this. And since we held resistance right here, if we break the low over here, could possibly take this with some volume to come down and retest this low. Because this is that retest I was telling you about.
Right.
Where price came up, we ended up coming right back up to that resistance.
So it seems like the main catalyst, or the main thing that would have stood out to you would have been how that 30-minute candle closed with no bottom wick, being an indicator that it was an overextended move.
Well, the indicator that it was an overextended move was the area to the left, and how we just had this move right here, and we mirrored this move right here. Coming down into this area, that's where it starts to get tricky. And then you look at the candle body, and you see that this candle closed with no bottom wick. And that, did this candle right here pass the low of that candle right away?
The 30.
This one.
Yeah, I think it did. Okay. Yeah.
So be aware of that too. Like, especially with this candle closing with no bottom wick. Again, it could very well continue, but it's just really like 50-50. Where if it passed the low of this candle right away, just know that that's going to be a liquidity grab, and we're going to continue right back up again.
Right.
You also
that happens a lot.
You also want to pay attention to those higher time frame levels, like the chart that you sent on the hourly and even the 4 hour. Mm-hmm. That is a very strong level, right? You have that consolidation on the hourly, you have that consolidation on the 4 hour, and that's the consolidation resistance that you're breaking below.
Right.
Right. So you wanna wait until price breaks below that, and then what you got on the 30-minute time frame. Now the next thing to do is wait for that top wick rejection that we look for, or that break and retest that we look for, and then look for your entry, right? So not look for the entry right away after the low is broken, but like we said, every single second of the market, there's buyers and sellers. You always have to take out the buyers if you're going to continue pushing in a bearish trend. You have to take out the sellers if you're going to continue pushing in the bullish trend, right? So if you have a candle that's closing without a bottom wick rejection, and then the following candle just continues pushing down, then you have to kind of think about, well, there's too much bearish pressure right now, but obviously there are buyers who are waiting on the sidelines. So you got to wait until they're taken out. That's why we will look for the break and retest. That's why we look for the top wick rejections. So in the current candle that you're looking at on the 30-minute, for example, on GU, that had all that. So same thing right here, right? Where you had that resistance being made, and then that nice push down that's happening. And now, because, we're waiting for the candles to close, or, whatever it is, you don't enter. You wait until the candles actually close. If you had entered this without waiting for that close, you would have just became one of these wicks, one of those sellers who got rejected.
So would you say, like, overall, because would you think that the break and retest in this scenario was valid, or if I understand correctly, is basically what you're saying is because, like, maybe yes, like maybe the formation itself was valid, but because in the grand scheme of things, like the last time that we had some buyers pressure, like, was a while ago, like that's something that needs to be more at the front of my mind when I'm considering whether to enter or not.
Yeah, and look at the higher time frame levels, pretty much is what I'm saying. So if these on the higher time frames, 1 hour, 4 hour time frames, those intraday time frames, you are coming right into that consolidation resistance to the left right here. Mm-hmm. Price was breaking below that. Well, now you need to see a candle close below that, so then it tells you that, okay, we're going to continue in that direction. That's not your entry, the candle close. That's just your confirmation. So there's a difference between the two. Your confirmation is, okay, we're headed in the direction. Your entry is like, okay, we've retested. We have like that entire checklist that we talk about in the trading plan, right? So you go through that entire checklist, everything is checked off. This looks like the optimal entry for me, and then a continuation down. That entry could look like, 3 different ways, for example. One would be that basic pullback and then a continuation down. right? Another one is you're pushing down and you got a break and retest, which is eventually the same exact thing. If you were to drop down to lower time frames, you would see a pullback happening on the 4-hour time frame here and then a continuation down. The third thing is if there's a lot of bearish pressure, sometimes all you're going to see is a top wick rejection. But even in that top wick rejection right here, if you were to put a box around it or something like that, since this is a 4-hour time frame, and you drop down to the 1 hour, 30 minute, 15 minute, you will see bullish candles that were closing here and creating resistance. But the whole concept, so there's a lot of different ways that you could go about it, but the whole concept is pullback, continuation down. Pullback, continuation down. Same thing for a bullish trend, right? Impulsive move, retracement, impulsive move, retracement, impulsive move, retracement. You're going to see different variations of it, but as long as this is all you're going for, like that, you're pretty much set.
Gotcha. And then, so if you go back just to the one screenshot that I had, on the one on the 30-minute, was one of my issues the fact that I guess the break and retest, because basically when I saw it, I was thinking, okay, like this is the break. I think I may have been too focused just on the fact that I saw the break and retest and kind of forgot some of the other moving parts. So do you think, so where the break and retest was, like if that was actually below the zone that I had as opposed to on top of it, would that have changed, like, I guess the validity of the entry that I took?
Yeah, because now you're getting a break and retest below that consolidation resistance right here.
Right, as opposed to just right on top of it.
Right.
There's still a little bit of uncertainty.
Right.
Gotcha.
This is great. You know, you asking these questions and you coming forth with your charts and stuff like that, that's what we want. That's what's going to help everyone else learn. Keep it up, man.
Will do. Thanks, guys.
Yeah, for sure.
Guys, unfortunately, I have to bounce. Hope you guys have a great day. Sharma, if there's anything you wanted to say?
Yeah, so we'll quickly just go over, like, if you were trading for the rest of the session, what would you be looking for? If that's cool. And we'll just do it on GJ and gold. So we'll start off with GJ. Yeah. So on GJ, we have that 4-hour resistance, right, that we have marked off here. There you go. Fantastic. So right here.
A nice projection.
So if price can essentially, you have a zone, right? So essentially if price can break above, anywhere above this area and then continue back up bullish, that's what you're looking for. Pay attention to the current 4-hour candle. It's going to close in a couple of minutes here. What did you just have happen here? Still holding on to the support, still holding on to this consolidation in the middle, right? All it did was reject all the sellers down here. It's coming back and it seems like it's going to close right into this area. So now if you're looking for an entry and if you're trading for the rest of the session, maybe for another 30 minutes, an hour, 4 hours, whatever it is, what do you need to see happening here? You need to see narrow down into your price action right here. You want this, ideally, you want this 4-hour candle to close right into that area. Why is that? Well, look to the left. You're narrowing in into your price action even more. Consolidation. So now what you need to see is the following candle, make a bottom wick rejection, and then flip back up bullish and continue up to the upside. As it makes that bottom wick rejection here, continues to the upside, you can have potential entries right here. This is on the 4-hour, so now what do you need to see on the 30-minute or the 15-minute time frames? You need to see break and retest forming here. Right? Once you get a break and retest forming here, continuation up to the upside, start looking for partials. Start it off as a scalp and then start looking for partials for your 10, 15, 20, whatever pips that you're looking for. You could let runners go, but understand that this is also another key level that price has failed to break above. On higher time frames, on the daily and weekly time frame, we have been in a nice bearish pullback without any sort of correction. And that's stemming from interest rates. So there's only 2 ways that the market collects orders, retracements or consolidation. We're obviously not seeing a retracement here. What we're seeing is a consolidation. So understand the restriction of your trade, that price may just come back, tap into these areas and pull right back into consolidation until further high impact data comes out and then continue back in our direction one way or another.
This is where I always say to close the full thing or close majority of your position once you reach that level. If you're playing these ranges, which you very well can, just know your limits on those trades, just like Sharma just said. Go over to gold.
Yep. But now look how it's just making that resistance, right? It didn't even continue. All right, let's go up to the 4 hour real quick.
Yeah, we finally broke 1830.
Mm-hmm.
And we could be heading right up to. We're starting to reach this previous support over here as well.
Yeah.
Right. Our next resistance, though, because we do have a nice clean candle right up to this point around 1860.
Mm-hmm.
Now, coming over here, we could get some kind of a rejection, like a top wick form, because those are all due to data coming out. Say we get some kind of a support here in the lower time frames, you could very well catch something because you got a clean move to the left. So you catch something right up to 1860.
Mm-hmm.
Unless we get that rejection, we come right back down to 1830 to retest, because that is a significant level.
I would even mark off the current level that it's rejecting, because as we saw on the 15-minute, 30-minute time frame, price was creating a resistance there. Not exactly where the candle is right now.
Right here.
Yeah. And price is rejecting right into that area. You come up to the 4 hour and you're like, okay, it clearly makes sense because there was a support that was made there first. Before price retraced, right? That was your support. Price retraced, grabbed some orders, gave you that retest. Remember, this is the structure that you're looking for. This is all price is going to follow. After grabbing those orders, that's when it pushed back down. So that's the level that we're reacting off of right now. So if you're going to continue bullish, look for that break and retest to the upside.
Absolutely.
All right, so I'm personally going to be watching GJ on the 4 hour time frame, and I am looking to kind of trade off the reaction of the fundamentals. So if you guys have any questions, always feel free to reach out to Stefanos or myself. So the best way, if this is your first time on the stream here, the best way to contact us and get a fast response would be on Instagram. My Instagram is SharmaFX, same thing as my YouTube channel. And then Stefanos, yours is?
StefanosFX 28 on Instagram, and then StefanosFX on YouTube. You can reach me on either one of those. As you were talking about GJ over here, I would love to see like a bottom wick over here,
yep,
and then a pass to this candle over here. Rather wait for a close above, but on the 4 hour, if we get something like that to fill this wick,
yep,
I would like to see something like that.
Yeah, and the point is just narrowing in into that price action. We exactly reacted off of this level, closed above it.
Exactly.
All right, awesome. Yeah, so I gotta go too, because I gotta leave right now to make it there on time.
Busy people.
Yep.
All right, guys, have a great day. Stay productive today. Stay on top of your stuff, and we will see you guys tomorrow. Or if you guys reach out to us on Instagram and stuff like that, we're always open to helping you guys